and you have a Sharia-compliant world of investable assets. While that has been productive, again, it's a very negative, technical, and legalistic approach to Islamic finance and does not promote innovation. One of the recent changes, as a result of the financial crisis, was this reassessment of motivation. We're looking at ourselves as bankers trying to sell our product rather than looking at the world and trying to deliver what they need. This motivational reorientation has led to development of a new asset class within the global ethical finance space referred to as impact investing. Now, impact investing tends to look at creating and actively managing, creating a positive social impact alongside a positive financial return. In one of the comments this morning, one of the points that was made was that when people think of Sharia investments, they tend to think of a trade-off. They see it as a zero-sum world, and so if I want to invest my money in a way that is halal, I have to sacrifice some financial return. That is a wrong way to view the world, and the ethical finance community is moving beyond that. They're seeing that the ethical deployment of capital to achieve social aims is actually value accretive from a financial perspective. It's not a zero-sum game, it's actually a win-win. You can go from 1 + 1 to actually equaling 2 to 1 + 1 perhaps equaling 2.2 or 2.5. So when we look at the ethical space, the emergence of this new asset class of impact investing has a lot of significant implications for Islamic finance. First and foremost, it provides, on more of a perhaps practical perspective, a way to think about how do we build infrastructural systems that allow us to measure impact and look at measuring positive social return from Islamic finance activity. Number two, it provides us with some paradigms and structures for thinking about how do we start to build a positive impact? How do we start to move from a negative screen to actually looking to create positive impact through our financial activity rather than simply looking at a legalistic way of doing our financial activity that, again, attempts to mitigate harm, doesn't necessarily drive positive change. So another, advantage of looking at the ethical finance industry and its implications for Islamic finance then goes back to the reorientation, a shift away from looking at the world as if I'm going to be in Sharia-compliant financial activity, I have to sacrifice commercial return to some degree. It's a way to look at that worldview and that equation rather than being a zero-sum game or a trade-off to looking at it as a win-win. So then from a more practical level, I'll wrap up with perhaps some comments around what I think and I see as potential opportunities here in Pakistan, and perhaps throw out some challenges to, again, in this room, we have a lot of leaders of Islamic finance industry here in Pakistan. I'd like to conclude with some challenges. Number one is to really look at what is your institution doing to promote Islamic financial literacy. Again, in the last, a lot of the comments, including the last session, one of the things we heard was that a lot of Islamic bankers, A, don't know banking, B, don't know Islam, which means as a result, you have Islamic bankers selling Islamic banking products that they know nothing about. So as an industry, what are you doing as leaders here, actively involved in the industry, responsible for taking it to the next stage of growth beyond the 8.5% penetration? I challenge the leaders here to really think about what are you doing to promote Islamic financial literacy in your own organizations, and then what are you doing systematically to create that change beyond your organization across the entire polity in Pakistan to help them understand what is Islam, what does it mean, and how do you live a halal financial life? We're doing some work with AlHuda, and their leadership in this area is tremendous. So you have tremendous resources here in Pakistan to help with that. But part of that leadership needs to come from the institutions itself. I guess the second challenge then I would throw out to the leaders here in Islamic banking is to look at how you run and manage your own organizations. In particular, from an innovation perspective, are you promoting information flows? Are your power structures supportive of innovation, or are they very vertical and top-down? I would argue that you would likely see that most information flows are highly limited, And most organizations are extremely vertical, not horizontal. So again, as business leaders, I would challenge you to look at how do you change and evolve your organization to be a top-down, power-led organization, to be an organization that is horizontal, that is about external orientation, is about delivering that Islamic value proposition that is incumbent upon us as Islamic bankers to deliver, not just that financial value proposition. Thanks.
Thanks a lot, Mr. Kavilash Chawla, for the very innovative ideas on Islamic finance and the related issues. And now I request Ms. Tara Uzra Dawood. She is the Chief Executive Officer, Dawood Capital Management Limited. She'll be talking on investment perspectives with the Islamic alternative and investment solution for everyone. Focus Pakistan.
Thank you very much, and it's a pleasure to be here. Assalamu alaikum. I wanted to begin by first saying it was such an interesting presentation that we just listened to, and innovation is critical to the development of Islamic finance, and we have great luxury here in Pakistan that we can be forerunners of such innovation. For example, impact investing and ethical finance, socially responsible finance that was just spoken about, is still a very big challenge in the West, because with UCITS, which is the European systems, the American systems, the Canadian systems, and systems around the world, there's still a struggle in putting together the legal and structural regulatory frame for Islamic finance or any form of responsible investments. Here in Pakistan, we are in a position where we can truly innovate, and I think it's really, really important that we do so. And then now I'll begin by giving a little bit of a talk on a focus on Pakistan in this context. So to begin with, as CEO of Dawood Capital Management, we were the first asset management company in Pakistan to launch an Islamic mutual fund in the asset allocation category. So we're particularly pleased that this industry has now grown to 14% of the entire mutual fund industry today. Today, I will talk about moving forward for Islamic finance in Pakistan, and in particular with asset management. So essentially, I'll talk about the global market perspective, Islamic finance in Pakistan, Islamic finance fact sheets, available avenues for Islamic investments. I will then talk about Islamic mutual funds, tax savings, challenges, recommendations, and then finally conclude. To begin with, as many of you are aware, 21.45% of the total 1.0787 billion is the expansion of 500 of these Islamic banks in 2011 compared to 2010. Similarly, the assets of the top 100 Islamic fund managers grew to 58 billion US in 2010, achieving a 7.6% growth. And we strongly believe South Asian countries are going to fuel the growth of Islamic finance in Asia. Now, I'm speaking about Pakistan AMCs. The current market share is 8%, which has been spoken about throughout this morning. The ideal was to get to 12 by 12. That's something we've been speaking about for many years, but we're already in 2012, so it's going to be very tight. Finally, to focus on Pakistan itself, we've got 500 Islamic financial institutions that the central bank is overseeing for USD 1.2 trillion. 5 full-fledged Islamic commercial banks, 12 conventional banks with Islamic banking windows, 800 plus Islamic banking branches, around 7 billion in deposits under management, which is approximately 8% market share, and 15 asset management companies offering Islamic funds out of the 24. 4 Takafa players, many of which are sponsors here today, and 52 Modarba companies. When it comes to Islamic investing, the priority and focus traditionally has been in stocks. As you know, stocks have remained a choice for investors who have a long-term perspective and can bear the short-term volatility. Commodities, and gold is a very, very coveted commodity here in Pakistan. It's considered the safest commodity to invest in and is Islamic. Gold prices were up by more than 30% and 11% in 2010 and 2011, respectively. Looking at it, we had gold funds even launched in Pakistan, and of course the Qat was taken from them, and it was a learning process in terms of structure to have that healthy balance between halal finance and top returns. Fixed income is the next category. It includes Islamic banks and financial institutions, ijara, sukuks, and so forth. Real estate is again considered very, very popular here in Pakistan. It's long-term, illiquid investment avenue, and there is a chance for erosion. Finally, mutual funds, which is the focus of my talk. They are the pool of investments that are they're pooling investments of all the options discussed. And in other options, an investor has a time to monitor investments personally. Here, the asset management companies, fund managers, do that work. The mutual fund industry in Pakistan is actually one of the oldest in the world. In 1962, when the government of Pakistan established NIT, which launched the first open-end equity fund, it was actually trailblazing internationally. Then there was a slowdown for many, many years here in Pakistan. And back in the 90s, you saw again a spurring and a sprouting growth of mutual funds. In 1994 and 1995, more funds launched in the private sector, and in 2006, the total number of asset management companies reached 30, managing 56 mutual funds, and that number has grown further today. In 2007, we launched the first asset allocation Islamic fund in Pakistan. At present, the total number of mutual funds is 141, and the total industry size is 288 billion Pakistani rupees as of December 2011. To put this in perspective, the assets under management of mutual funds can be evidenced by this chart here. The overall industry includes great future growth potential, and because innovation is critical, and in Pakistan we can be a leader of that, the Islamic market share can actually be a trailblazing element for the entire mutual fund industry, in that it can attract more and more unit holders who want halal finance. The market share of Sharia-compliant mutual funds is 17%, which is PKR 44 billion. The overall growth trend is enormous. We're seeing here in Pakistan an Islamic portfolio showing a 687% growth since December 2006. That's quite remarkable, and it's evidenced by all the people here today, the top players across the board. We also know that the Islamic mutual funds in Pakistan, total Sharia AUMs is approximately 44 billion as of December 2011. Pakistan is very much an emerging economy in every sense. At present, you have other benefits such as the tax benefits with mutual funds that aren't in place for banking. This is extremely exciting for investors because according to the Finance Bill 2011, an individual investor can claim up to PKR 100,000 salaried and PKR 125,000 self-employed in a tax year or an investment of 5 lakhs, or 15% of taxable income, whichever is lower. Subject to that investment must be held for 3 years. This is a very, very lucrative way for us to drive an industry. How much benefit can increase from this individual's return? We'll see that in the following slide. Let's look at this working example here. Let's assume that both investors A and B are under 20% of the tax bracket and invest 5 lakh. An Islamic income fund providing an annual return of 11%. Assume a time horizon of 3 years. Investor A availed the tax credit while investor B did not. Investor A got the tax credit of 1 lakh, which boosted return from 11% to 38.75% the first year, and after 3 years, the cumulative return will be 70%. Unlike investor B, whose return remained constant at 11% throughout 3 years, and cumulative return was just 36%. You can see from this the extreme benefit of tax-exempt status that currently exists. So at present, there are some challenges despite those benefits, and these challenges include the Islamic industry in Pakistan has a huge issue of mass level awareness. It was amazing listening to earlier being able to innovate and come up with exciting new products, but still to some degree in Pakistan, it's important to let people know any products exist. Islamic finance is still very young in Pakistan, so mass awareness is a #1 issue. Also, the confidence of investors is often a bit wary and shaken. After the financial crisis of 2008, there's also been fraudulent schemes and so forth that have made a lot of investors wary. Further, even if investing is halal, people are sometimes scared when they feel it's safer to use under their mattress or buying gold or real estate. It just has been our cultural tradition, and it gives people a sense of comfort. So in addition to mass awareness, institutions like each of yours need to connect with different clients and potential clients to give a feeling of security and a feeling of comfort that not only will the money be halal, the money will be accessible, and that it is a wise and smart investment for them. We also have a dearth of liquid debt instruments we're facing, which is another challenge in the industry today. While talking about the challenges faced by the mutual fund industry, the other one is mitigating risk. Due to low margins, budgetary constraints for marketing activities, there is a challenge in bridging this gap, but I know that the Mutual Fund Association has a public awareness committee, although that's overall, is not specific to Islamic. But the traction that we hope to achieve is something that I know collectively working together, the networking sessions in today's conference and other similar forums are very critical, because as an industry, if we unite for mass awareness and innovative driving measures, there's nothing we can't do in Pakistan. Last but not least, we will conclude based on a few final thoughts that Islamic capital markets are on the verge of takeoff. It's ours and our opportunity to truly make a difference. Market participants, including investors, regulators, advisors, and institutions, meaning each and every one of you, are going to be critical to this success. And there are new innovative products like Islamic hedge funds, derivatives, and swaps coming out in Pakistan as well. With this analysis, I would like to recommend a few steps. Cross-border market integration, establishing affiliations with mutual fund associations, teamwork, support in creating the mass awareness and education within the industry, promoting healthy business practices and ethical code of conduct, establishing and strengthening distribution of mutual funds, and the media playing a critical role. This is just the start. I believe together, everything and anything is possible, and Pakistan will be a world leader. Thank you.
Thanks a lot, Ms. Tara Uzra Daud. She is from Daud Capital Investments. And now I will request Dr. Aurangzeb Sahab. Dr. Aurangzeb Sahab will be talking on Islamic investment funds, the challenges and the opportunities. He is the head of the Department of Management Business Administration, Daud Bhai Institute of Higher Education.
Assalamu alaikum. Most of the speakers have already talked on those issues which now I am going to narrate. First is the Islamic Investment Fund. Very briefly, the people of Pakistan are confused. When they are aware that there is an Islamic finance and we can put our money there, even then they are confused whether we should put our money over here or in any other fund. What will be the benefit? And the basic thing is that they depend on faith. Their faith of the Muslim inspired them that their money should be halal and it should be invested in halal things. It should not be invested in haram things. This statement that most of the people of Pakistan are in confusing state, it will be seen, you will see here and there, and many people will come across you and they will question you that where our money should be spent. So, without wasting time, these are the classification. These are for your, as a reminder, that if we will invest money over here, this will be the procedure. Most of the people are unaware regarding the procedure and where we will invest money. Next is ijara. Next. Sorry. We have already discussed that these should be the conditions, and then the second is